Go interactive with X-Ray, where we bring trading experts to you live in the platform. Choose sessions, watch live market analysis, and catch up on your favorite market insights anytime. Ask questions and go one-to-one with leading experts on gold, oil, FX, crypto, indices, and equities. X-Ray, your very own analysis team, right at your fingertips. That's higher trading from MarketsX. Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
What's happening, people? Good day, good morning, good afternoon, everyone. How are you guys doing? Let me know how you're doing in the comments box below. Today, I want to talk to you about the top 5 reasons why traders lose money in 2021. For the ones of you that don't know me, my name is Andrew, and for the last 10 years, I've worked in many retail and institutional Forex brokerages in Europe. Join me in this fantastic journey and find out the secret corners of Forex trading from top industry specialists. Learn what most Forex brokers don't want you to know by watching our daily broadcast, guys. And if you like what you see, like, share, subscribe on our YouTube channel, and support us in delivering more great content. I'll give you exactly 30 seconds to click that subscribe button down below, and then we get started. Go on, don't be haters, smash that subscribe button. 5 reasons why traders lose money in 2021. Coming up. Right, guys, and we're back with the 5 reasons why traders lose money in 2021. Very important to know. Let's start with number 1, guys. They get scammed. This is the main reason why traders lose money in 2021, guys. Are you surprised? Don't be. Over 50% of the traders, of the people that actually want to start their journey in the financial markets, they don't start it the right way. They get scammed, guys. That's why they start losing money in the financial markets. That's why they don't want to approach the financial markets after having a bad experience. They think everyone is the same. They think everyone is bad. So this is the number 1 reason, guys. Over 50% of the Forex traders, of the beginner Forex traders, unfortunately get scammed when they start their journey in the financial markets, purely because they don't know what questions to ask, how to look for an operating license for the company. They don't know the difference between operating licenses. They believe everything they hear on the phone from a complete stranger within the first 5 minutes, and they pull their card out and deposit. That's one of the reasons, and top 1 reason why traders lose money in 2021. Let's move on to the next one, guys, which is as important as the first one. The second reason is they don't really have any real knowledge about trading. You might contradict me. You might say, no, my neighbor taught me, my good friend taught me, my mentor taught me. Let me disappoint you guys. If your good friend, your mentor, never worked in the financial markets, he can never teach you what's happening behind the scenes and what are the things you should be afraid of or you should take action on. Okay, this is the second reason. You don't have real knowledge about trading. You never took the time of day to sit down and learn for a few days from someone that worked in the industry. I'm going to ask you one question. Let's say you have a medical condition and you're going to a hospital. Who are you going to talk to? Are you going to talk to a doctor that studied for years? Or are you going to talk to a patient in the hospital that has a similar condition to yours? Who are you going to believe, the doctor or the patient? This is exactly the same thing when you're dealing with so-called trading mentors, or friends or buddies or work colleagues that claim they can teach you how financial markets really work if they never worked a single day in the financial markets. This is it. Number 3, guys. Let's move on to number 3. Number three, why traders lose money in 2021. They don't understand how leverage works, guys. Leverage is that tool that makes the difference between the stock market and the CFDs market. When you're trading online, once again, you are not trading physical stocks or physical assets. You don't own the assets. You're trading them as contracts for difference. Now, the leverage, is the best tool you can use in your favor when you're trading CFDs, when you're trading online. That's why the CFDs market became so popular in the last 10 years, because people get to use the leverage, because trading is now available to the average person with only an investment of $500 to $1,000, and they can open a position that's really worth on the market $10,000. $50,000, $20,000. This is done through the use of leverage. In a very short sentence, what does a leverage of 1 to 400 actually mean? That means you have to invest as collateral 400 times less than you would invest on the market without any leverage. Now, why is leverage dangerous, you might ask? Because you're only investing 10%, guys. You're only investing 3% or 4% from the overall trade that you want to open. The rest is covered by the brokerage. Okay, so this is what leverage is. Now, think about it this way. If you only have 3% in your account and the market moves against you 1% or 2%, are you going to get wiped out? Most probably, yes. You're going to get into a margin call, and then you get into a stop loss or stop out, and that's it. That's the danger of using the leverage. You need to understand both sides of the coin. So this is the third reason why traders lose money in 2021, guys. They don't understand how leverage works. Let's move on to the fourth one and see what is the fourth one. There we go. Number 4, guys. The fourth reason why traders lose money in 2021 is because they don't know the correlations, the asset correlations, or the asset classes. Basically, they don't know much about trading. All they know is that Bitcoin is $30,000 today, and if they invest $500 or $1,000 or $5,000, they might make $50,000 by tomorrow. That is wrong. That is completely wrong. That's not how it works. And the probability of you losing your investment in no time, if you think like that, is 99 to 100%. So you don't know the correlations in the financial markets. What does that mean? I know you have a lot of assets you can trade on, but believe it or not, most of the assets are correlated together. I'll give you an example. USD JPY, USD CAD, and USD CHF. What do they have in common? They have the US dollar in the left-hand side, right? Now, what is the correlation between the US dollar and gold? Right? Most times it's an inverse correlation. It's a negative correlation. So when you're trading, you're going to see a lot of beginner traders opening one single trade. Okay, let's say USD JPY, and that's it. But my question to you is, if the dollar is weakening versus the Japanese yen, isn't it weakening against all its other peers? Because there is something that triggered that downward movement, that weakness in the US dollar. And very likely it's going to be something that happened on the US side of things that triggers that weakness in the US dollar. So if that's the case, then very likely the US dollar will weaken against all its other peers. Now, if you know that the US dollar and gold have a negative correlation, what stops you from opening a tiny position on gold as well? So you spread your investment across multiple trades, multiple assets, and you're increasing the chances of being successful. If you got that trade right, guys, you're not going to have 1, but 4 trades going into profit. You're going to have 3 trades on the US dollar and 1 trade on gold. That's if you get the direction right. And now let's move on to the fifth thing, why traders lose money in Forex trading in 2021, guys. They expose the entire trading account on one single trade because that's what they're being taught by their so-called account manager or friend that learned how to trade on a laptop, in the backyard somewhere. Don't expose your entire trading account on one trade, guys. This is the biggest mistake you can do, and you're going to blow up your account in no time. Your balance, your account is there to last for a long time. The less you use from it when you're exposing money to the markets, okay, the lower the chances of you getting wiped out would be. Okay, this is it. These are the top 5 things that generate massive losses. That's why traders lose money in 2021. Obviously, there's much more to this, guys, but we don't have time to cover everything. So if you want to find out more, feel free to contact us, guys. InstructFX.com, info@InstructFX.com, or my direct email, thechartwhisperer@gmail.com. We do provide free mentoring to anyone that needs it, beginner or experienced trader. Feel free to contact us, and either myself or one of the members of my team will contact you and provide you the knowledge that you're missing. I worked in the financial markets for 10 years. All my staff members worked in the financial markets for a number of years. They know what's happening on the other side of your trades. So if you want to get some knowledge from someone, talk to someone that worked in the industry. Join us again tomorrow, same time, same place, guys, for another 5 minutes of wisdom. And don't go anywhere. We're coming back live in 1 minute with the charts of the day, with Neil Wilson from the heart of London, and with the US markets open. Stay tuned. We're coming back live.
Go interactive with X-Ray, where we bring trading experts to you live in the platform. Choose sessions, watch live market analysis, and catch up on your favorite market insights anytime. Ask questions and go one-to-one with leading experts on gold, oil, FX, crypto, indices, and equities. X-Ray, your very own analysis team, right at your fingertips. That's higher trading from MarketsX. Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
Boom, and we're live. What's happening, beautiful people? Good morning, America. Good afternoon, Europe, and welcome everyone to our live stream. How is everyone doing this afternoon? Let me know how you're doing in the comments box below, guys. And please remember to absolutely smash that like, share, subscribe button. It's free. It's not going to cost you anything. If anything, it might benefit you on the long run. Now, be supportive, guys. Don't be haters. Smash that subscribe button. Now, let's get down to business, guys, and see what is happening in the markets today, Thursday, 20th of January, 2021. Bloodbath on Wall Street yesterday, guys, with a massive sell-off on the US indices. The US stock markets are seen opening mixed today, probably to the downside once again, as the Wall Street sell-off continues. Tesla stock was marked down 4.9% in pre-market trading. Apple stock was indicated down 2.3% pre-market opening, and Facebook fell 0.5% as well. Bitcoin, on the other hand, guys, everyone's favorite, continues the downtrend with little gains today. US markets open, coming up. Right, and here we are, beautiful people, 15 minutes away from the US markets open. We're going to have Neil Wilson joining us shortly from the heart of London with the latest news on the stock markets. Until then, let's have a quick look on the economic calendar and see what happened today, Thursday, January 28th, 2021. So we had the World Economic Forum, the annual meeting, which is usually happening in Davos, Switzerland every year. This year, it happened in Davos, but it was a virtual event. Okay, today I believe is the last day, so we're gonna have some statements probably in the afternoon. Then we had at 10 o'clock GMT plus 2, guys. We had the press conference from the European Central Bank, followed by Italian 10-year BTP auction. Okay, at 12:45 GMT plus 2. We had the German CPI numbers coming out 0.8% versus an expectation of only 0.4%, giving the euro a bit of hope. Then at 3:30, guys, exactly 1 hour ago, we had the gross domestic product on the US dollar, guys, which came out for the fourth quarter, how economists predicted, and we had the GDP price index, okay, coming out at 1.9% versus an expectation of 2.4% from consensus. Goods trade balance came out lower than higher than the previous one, a negative 82.47 billion versus a negative of 85.49 billion. Okay, in the previous month. Initial jobless claims in the U.S. came out in green today, 847,000 jobless applications versus an expectation of 875,000 from consensus. The retail inventories, the ex-auto sector came out 1.1%. There was no forecast on this one. And in 42 minutes from now, guys, we're going to have the new home sales, okay, that will be announced on the US dollar. Also in 42 minutes, we're going to have the German president speaking, holding a press conference and probably bringing the audience more updates on the potential lockdown measures that Germany and other European countries have announced recently. At 1800 hours, guys, for our Russian viewers, if we have any Russian viewers, Privet, Zdravstvuyte, Dobry den, how you say in Russian, we have the unemployment rate expected to come out at 6.1%, unchanged from the previous month. Okay, and the retail sales, followed by a press conference from the European Central Bank at 7:15 p.m. GMT plus 2. This is what is happening in the economic calendar, guys. I know for some of you it might not be interesting, but I had 2 unsuccessful trades in the last 24 hours, and that was because I did not check the economic calendar, guys. So I think this says it all. Now, let's have a quick look at the earnings calendar, guys, as the earnings calendar got really, really hot recently. Yesterday, we saw Apple, Tesla, and Facebook reporting after markets close. Even though Apple met their targets, the earnings per share and the revenue targets, still the stock seems to be weakening as investors' confidence, investor sentiment seems to be weighting heavily. Tesla, the same, they missed the earnings per share coming out at 0.8 versus $1.04 that was expected. However, they beat the revenue forecast coming out at 10.74 billion versus an expectation of 10.47 billion. Facebook as well met their earnings per share and revenue forecasts and exceeded them. $3.88 for Facebook versus a prediction of $3.16. And in terms of revenue, 28.7 billion versus an expectation of 26.3 billion. Okay, AT&T did well. Abbott Laboratories did well. Boeing took a big hit, guys. I mentioned this yesterday. Big hit for Boeing. But what do you expect when your entire fleet is grounded for almost 1 year? Right, let's see what is happening today, guys. We're still waiting for Visa to announce their quarterly earnings. We had MasterCard announcing them minutes ago. $1.64 earning per share for MasterCard versus an expectation of $1.54. And in terms of revenue, guys, $4.12 billion versus an expectation of 4.02. Okay, this was it. We had McDonald's missing out, guys. McDonald's missed out their earnings per share and the revenue forecast, guys, coming out at 1.7 flat earnings per share versus an expectation of 1.78. And in terms of revenue, 5.31 billion lower. Yeah, only 5 billion lower than 5.36 that was predicted. Now, we still have Mondelez to announce 0.66 in terms of earnings per share expected and a revenue forecast of 7.15 billion. Now, more stocks we're going to discuss with Neil Wilson in a few minutes, guys, from the heart of London. Meanwhile, let's have a quick look and see what is happening on the markets today, guys. Top 5 things to know in the markets. Then we're going to have another interesting article, and then Neil Wilson will join us for the U.S. markets open. So, number one on the board, the great Stonks Revolt. Whatever that means, buckle up. It's going to be another wild day in the Green Stonks Revolt of 2021. Monday and Tuesday saw one of the biggest gross reductions in exposure to the market by hedge funds in the last decade, according to Morgan Stanley. Pay attention, guys. That's down to the leaking given to hedge funds and other pros by the army of retail traders organizing on Reddit and other social media. How long the movement can last isn't clear, unless the day traders actually want to be the long-term owners of failing game stores and debt-laden empty movie theaters. The urge to take profits may very soon start to become irresistible. Anyway, I'm not sure how much you understand from the number one on the board. I didn't understand much from it either, apart from a key phrase, but I'm not going to repeat that. Now, it's the phrase about leaking and hedge funds and stuff like that, but I'm not going to repeat it. So, number two on the board, guys, GDP jobless claims due. We saw the data coming out minutes ago. I spoke about it. We're going to speak about it one more time. Now, analysts expect the economy to have grown at an annualized pace of 4%, a sharp slowdown from the 33% seen in the third quarter. Fair enough. For personal consumer expenditures, the favored measure of inflation at the Federal Reserve are seen rising 1.5% year on year. At the same time, more timely data on the labor market will be released. Initial jobless claims are expected to have stayed at high level of 875,000 last week. New home sales data for December will happen in about an hour from now. So, in terms of initial jobless claims, guys, we saw in the economic calendar the data. 875,000 expected, 847,000 came out. So that's supposed to be good for the US dollar. Right, moving on. Number three on the board, guys, stocks, US stocks set to open mixed today. US stock markets are set to open mixed after their sharpest one-day sell-off in weeks on Tuesday. That's when it started. By 6:35 a.m. Eastern Time, Dow Jones futures were up 10 points, less than 0.1%. That's absolutely nothing. S&P 500 futures were down 0.2%, again, nothing, while NASDAQ futures were down 0.8%. Right, that is closer to 1%. Yeah, but the 0.1 movement, the 10 points on the Dow Jones, after a tumble of over 200 or 300 points, that means absolutely nothing. The deluge of earnings continues with both MasterCard and Visa reporting, along with Comcast, McDonald's, Altria, and Dow, Stanley Black and Decker, and three of the country's biggest airlines, American, JetBlue, and Southwest. Don't expect the airlines to do well this year, guys, for a solid reason. No airplane moved much in the last year or so. So there we go. Right, number four on the board, guys. Tesla, Apple can't meet high expectations. And you will ask me now, how come if the numbers came out in green, if the earning numbers came out green, how come the stock tumbled? I'll tell you why in just a second. Tesla recorded its first full year of profits, and Apple recorded its first ever quarter of $100 billion in revenue, but neither could live up to the sky-high expectations implicit in their current stock prices. Let's see why. Tesla stock was marked down 4.9% in pre-market trading after forecasting growth of only 50% in both of the next 2 years. So this is the reason. While Apple was indicated down 2.3% despite raising the average selling price of its iPhone from $803 to $879 in the space of a year. Right. Now, when you have the earnings season, guys, you're also going to have a statement from the company, either before or after or in the same time. So, investors' confidence is what weighs heavily on the direction of the stock price. There's no technical analysis. There's nothing like that. So investor sentiment. Now, even though Tesla met their expectations, their statement was that they're only forecasting a growth of 50% for the next 2 years, which is big. It's a big hit. If we're looking at Tesla's, where is Tesla? Bear with me for a second. Right. We're looking at Tesla's market cap, of $819.14 billion. Okay, that is huge. So them only meeting 50% of the target for the next 2 years, okay, is quite bad, guys. Right, with Apple, probably with people suffering so much in 2020 from the COVID pandemic, guys, they took a step back from being really, really posh, and spending thousands of dollars on a phone. Although it's one of the best phones out there, still it's almost $1,000, guys. With $1,000 in the States, you could try and feed a family of 3 people. Yeah, if you're really, really careful for almost 2 months, let's say. Right, let's move on to Facebook. The other mega cap 2 report after the bell on Wednesday fell 0.5% after warning of regulatory challenges and to its dominance of the online ad market, accompanied by some highly critical comments of Apple by its CEO, Mark Zuckerberg. Well, we know by now that Facebook, yes, is doing tremendously well in terms of online marketing. Okay, they would advertise before this. Probably they would have advertised a piece of shit if that piece of shit would have paid the money. Now, this led to Mark Zuckerberg testifying in front of, I think, tens of people. Okay, almost every month we see Mark Zuckerberg testifying either in front of the European Committee, either in the US, either somewhere else. So, okay, this is the reason why. Now, luckily, Facebook is tightening their restrictions, okay, in terms of advertising. So who knows? Maybe things will improve a bit. Right, number 5 on the board, guys. The last but not the least, oil steady despite pressure on risk assets. The selling pressure in the stock market had only a limited effect on crude oil prices, which remain well supported by a steady drawdown in global inventories, illustrated by a sharp drop in the US stockpiles, announced by the Energy Information Administration on Wednesday. By 6:35 a.m. Eastern Time, U.S. crude futures were down 0.2% at 52.77 a barrel, while Brent futures were down by a similar amount at 55.41 a barrel. All right, these are the top 5 things to know in the markets today, guys. This is what is happening. Some of them already happened. Okay, some of them will happen. We're going to have Neil Wilson joining us shortly, guys. But before that, let's have a quick look at what happened to the U.S. economy, okay, as we had the announcements coming out half an hour ago or so. The U.S. economy slowed sharply in the final quarter of 2020 as a third wave of COVID infection caused states across the country to put tight restrictions on social gatherings and economic activity. Gross domestic product expanded at an annualized rate of 4% in the 3 months through December, according to the Census Bureau first reading. The reading is likely to be revised over the coming weeks. That contrasts with an annualized growth rate of 33% in the 3 months through September, when the economy broadly reopened after the first wave of infections and lockdowns. The number was exactly in line with expectations ahead of time. The figures suggest that in the second half of the year, the economy recovered around 3/4 of what it lost in output in the first half, Jason Furman, a senior fellow with the Peterson Institute, said via Twitter. At the same time, the Department of Labor reported a bigger than expected drop in the number of people filing initial claims for jobless benefits last week, although the number remained stubbornly high at 847,000. Analysts had expected the claims to come out at 875,000. Right, the improvement was not as large as seemed at first glance. However, the previous week's figure was revised upward by 14,000 to 914,000. Okay, well, to be honest, when you're so close to 1 mil, it doesn't really matter if it's 900,000 or 900,014. Yeah, it's the 900,000 that's the problem, not the 14,000. Right, okay. Now, we're going to have Neil Wilson joining us shortly, guys. Quick look at some stocks. Okay, we're probably 1 minute away from the U.S. markets open and 1 minute away from Neil Wilson joining us. Right, so quick look at some stocks, guys. Get your pens ready. Let's see what's going on. Tesla stock fell 4.8% after the electric car maker failed to provide a concrete target for vehicle deliveries in 2021, even as it posted record earnings today. yesterday. GMP Securities has downgraded its investment stance to market perform from outperform. Okay, which is good. Now, GameStop, guys, the new favorite. GameStop stock rose 28%, continuing the retail-based momentum, which has seen the shares in the video games retailer soar above $450 from $400 just a week ago. Wow, this lockdown, guys, unbelievable. How many people, how many grown-ups still play PlayStation? I'm one of them sometimes. Right, American Airlines rose 48% as retail traders moved to squeeze short interest in stock after the airline sales came in ahead of expectations in the fourth quarter. It still reported an $8.9 billion annual loss on Thursday, its biggest on record, which its cash burn rate around $30 million a day in the quarter. Right, we have a series of pop-ups. Now, Southwest Airlines rose 5.5% after the airline forecast the January revenue will be down 65 to 70% compared with 2019, slightly better than a decline as much of 75% it previously forecast. It still reported its first annual loss since 1972, guys. Right, Apple fell 2.4%. We spoke about it. Facebook rose 0.3% after the social media giant easily beat quarterly revenues. But let's see how long is that gonna last for. The Dow, guys, the Dow stock rose 0.8% after the company reported a jump in fourth quarter profit of over 61% compared with the third, helped by higher demand and prices for its chemicals. Right, McDonald's stock fell 0.9% after the fast food chain missed both earnings and revenue estimates with its quarterly numbers, although its U.S. comparable restaurant sales did beat forecasts. All right. Right, this is it so far. AMC Entertainment fell 15%. BlackBerry fell 9.6%, and Nokia ADR dropped 18%. All three stocks weakening after they were subject to a short squeeze on Wednesday. Okay, now I have a proposition for you. Let's take a 30-second break, guys, while I welcome Neil Wilson, and then we're coming back live.
Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
Right, guys, we should have Neil Wilson with us any second now. There we go. Neil Wilson from the heart of London. Hi, Neil. How are you? Good afternoon.
Yeah, very well, thank you. Yeah.
All good?
Yeah. Very entertained by everything that's happening with the GameStop and the Reddit Wall Street Bet story. So very interesting.
I am horrified. What is the situation in London, Neil? Do we know when the lockdown will end there?
Not really, no. I mean, March the 8th is the earliest we know. We got an announcement from the Prime Minister yesterday saying basically March the 8th would be the earliest that schools could go back, and that would be the sort of the very first loosening of restrictions would be schools going back. That's really the number one priority. So everything else would come after that. So they're going to announce it probably after the February half term. There'll be a review, and then that allows them 2 weeks until March the 8th. So that's hopefully when we start to see things get back to normal. When
you can get out the house, basically.
Yeah. Well, you get out the house, no big deal. They're pretty relaxed, and as long as you're not sort of congregating in groups and that kind of thing.
Yeah, but people seem to like groups for some reason. Neil, I wanted to ask you, what is going on with the massive sell-off on Wall Street? What is the catalyst for that?
Well, I think you've got to look at that, the sort of volatility and the uncertainty caused by this Wall Street Bets Reddit group that's caused havoc with a couple of hedge funds, and they've blown up one hedge fund already, Melbourne. There's some ridiculous moves happening in certain stocks. We've even seen silver move this afternoon, and there was talk about the Reddit crowd going after silver yesterday, and sure enough, just as the sort of US markets opened, we saw silver pop higher, moved about $1 in the space of 20 minutes. Big move higher.
Sorry to Neil, check this out. We are 1 minute into the US trading session. Check out the spike on silver, man.
Exactly, that's what I'm saying. Yeah, so that's the
Wow.
that's the move. That's the Reddit crowd going after silver, and it's now it's we're sort of watching to see what the Reddit crowd are going to do to see where the next where the action is going to be.
Wow, it's surprising what's happening. Now we're looking at the S&P and the Dow that closed sharply lower yesterday. Thank God we have a positive opening today, 3782.66 on the pricing provided by investing.com for the S&P. And for the Dow, we saw a positive opening on the Dow. Wow, look at that engulfing candlestick. Again, the Dow closed way below yesterday. It opened on a positive note today, 3058,359, again on the pricing provided by investing.com. Is this the rebound?
No, I would expect a bit more downside. I think I put out in a note last week that we expect a sort of 5 to 10% correction in the coming weeks in Q1. So I think we're still in the downtrend. I think you see a bit more of a correction. Maybe not that much more, but certainly there's probably a little bit more to go. There's still a lot of uncertainty out there, and we've got to get through earnings season. And I think there's just enough uncertainty. I think you're seeing the US Treasury yields drop back. That sort of move needs to play out. I think we're seeing this correction in the market. We see Treasury yields come down a bit, and then we get back into the sort of growth story again. Stock markets move higher, bond yields move higher, and I think maybe a resumption of the dollar weakness story.
Right. Talking about the dollar weakness, what weakness? Because this would have been, this weakness. Okay. This is what we're talking about. This would have been my next question. What on earth is going on with the US dollar that seems unstoppable in the uptrend for the last 2 days? I was wondering why so high and so fast, but I saw the numbers that came out earlier on.
Yeah. I mean, I think, you're looking at, it's always a time with the dollar, but it's a bit of a corrective move, I would say it's probably a bit of a pause really in the downtrend. I think there's probably a bit more for it to go. I think you're just seeing this sort of retracement, paying back, and some of the market moves that we saw sort of through November, December, where you saw yields move higher, stocks move higher, and the dollar weaken. I just think we're seeing a bit of a retracement, and then the resumption of that trend will come later in the year.
You know why I'm a bit upset today on the US dollar? It cost me some money in the last 24 hours. Because all the signs were pointing to a sell. Okay, I just didn't know the trigger. Yeah, and I was very stingy. I put a very tight stop loss, and it closed with a stop loss. But anyway, let's see what's going to happen from here. Let's have a quick look at gold futures, see what's happening with gold. There we go. Right, there we go. Silver and gold finally pushing higher, and they're not pushing higher how we got used to by now, step by step, support resistance levels. No, we just see a slingshot right now.
Yeah, I mean, you saw gold. I mean, gold sort of moved weaker yesterday. I think on the broad market sell-off, you often see gold actually move with risk assets just because investors need to raise cash to cover margin calls and so on, and cover their positions. So I think often you do see gold move lower as a result. So a bit of a snapback today. I don't know if it related to the move in silver that we've seen as well at the same time. Could be related there. I mean, I think lower yields in the US, weaker yields should be supportive of gold, and we have seen US 10-year Treasury yields move under 10%, under 1%, yesterday. So weakness in US yields, at least short term, should be supportive for gold.
I understand. Right. Now, in terms of the US indices, what should we expect from this shake-off? When will it end? And if you have any hints, without providing investment advice, of course.
No, I mean, we'll probably see a bit more selling. I think there's, we're in a bit of just a small downtrend. I think you see a little bit more to downside, and then a resumption. Hopefully, I think you see probably some of the sort of cyclical names start to pop up again. You start to look at vaccines again. There's always a risk that the selling continues if the vaccine situation doesn't pan out as planned. That is a big headwind potentially. But I think that as well. The other headwind being if we don't get the Biden stimulus package as envisaged. So I think that there's a couple of headwinds. I think that that was reason to be sort of to see a kind of short-term move lower, but then ultimately you get more clarity, you get a bit more kind of momentum building with sort of dip buyers coming in and people looking to deploy cash again. So I think you see that sort of bit more downside maybe, and then a return to the highs.
Right. And the last question, what should we keep an eye on this week? What's left of this week, Neil? Do we have something hot apart from earnings and stocks?
Well, yeah, I mean, I'll be looking at the Reddit situation. We've seen how it's moving. They've moved GameStop, they've moved AMC Entertainment, they've moved BlackBerry, Nokia, COS, now Silver, American Airlines as well. It's on a bit of a short squeeze. You've even got potentially some UK names like Pearson and Cineworld, which are heavily shorted. They could be swept up in this. And yesterday you saw Pearson and Cineworld actually rally about 10-12%. Just I think probably with the hedge funds that were short, just covering their backs just a little bit by covering those shorts. So that would be the main thing I'll be looking at.
I understand. Right. Okay, Neil, thank you ever so much. I'll see you on Monday. Maybe, who knows, something good will happen eventually.
Yeah, always.
Right. Have a nice week. Thank you for your time, Neil, and I'll see you on Monday. Have a good one. Right, guys, we had Neil Wilson with us from the heart of London, once again bringing us fantastic news. Let's take a 30-second break, and then we're coming back live with the charts of the day and the signals of the day. Are you ready? We're coming back live in 30 seconds. That's enough time for you to absolutely smash that subscribe button.
Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from MarketsX. Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
Right, guys, and we're back. Sorry about that. Apparently, investing.com has a tiny issue with the charts. So, obviously, I'm going to use the charts of markets.com, guys, which sometimes can be better than what you see on investing.com. Also, they have amazing signal center, which is displayed directly on the chart, and it's even telling you the source, where it comes from. If it's from bloggers, from investors, from hedge funds, or from insiders. This is one, and you have more signals, guys, on stocks. Okay, and again, it's telling you the source. Amazing online trading platform provided by markets.com. Now, also, what's good to see is that unlike, let's say, the MT4. The MetaTrader 4 or other trading platforms, this one has all the asset classes separated. So for beginner traders, it's a very good one. Even for experienced traders, guys, I don't know if you like to keep scrolling up and down through a huge market watch. It's much easier if you just click here and this is it. Now, let's move on. Let's see how the markets open today, guys. I'm going to start with the currency pairs. We're looking at the Euro US dollar on a 4-hour chart, which I'm going to bring down to a 1-hour chart. There we go. Right, finally, a bit of volume on the markets today, guys. A bit of positivity on the euro, which this positivity just started at the US markets open. I'm checking out the euro since 3 o'clock, 3 a.m. this morning, and I was waiting for a catalyst. I was waiting for something to push the price back up and to push the price of the US dollar back down. Unfortunately, this happened just this afternoon. Okay, and my trades got hit by the stop loss, but it's fine. I had a stop loss. I didn't lose much. It's fine. So finally, the euro on the rebound. Okay, we might see it trading as high as 121.75. Okay, it's 121.29 as things stand right now. If it's gonna keep on pushing, probably traders will move their first take profit targets at 121.80, somewhere in that region. Right, let's move on. Let's have a look at the cable, guys. GBP USD, which again is in an uptrend overall. I think the uptrend is pretty clear. I'm gonna try and draw on the chart. Okay, to highlight the uptrend for you guys. There we go. Yeah, this is the uptrend that the cable is forming. There we go. Okay, not really complicated. So yesterday we saw the pound dropping. Overnight we saw the pound dropping. Finally this afternoon it bounced off this trend line and it started going back up. So if this is the case, probably traders will eye for the 137.58. Okay, as the first take profit target, and if that's reached, then they're going to take it from there. Now, we're looking at the Euro GBP, guys, which is on a downtrend for quite some time now. For what? Since the 20th of December, yeah, we see the Euro swinging up and down, but overall is in a downtrend versus the Great British Pound. Okay, this downtrend, by the looks of it, you see a lot of selling power, a lot of volume there at the bottom of the chart, guys. By the looks of it, the downtrend might continue today. We're looking at USD JPY, guys, which again, it's supposed to drop, but it refuses to drop, at least as things stand right now. We can see the candlesticks consolidating up there, okay, which usually implies a bit of volume on the market, which you can see here at the bottom of the chart, okay. And when the candlesticks usually consolidate, okay, that's a bad sign for the downtrend. Let's put it that way. Right, now, the Aussie dollar, guys, the Aussie dollar took a tremendous beating overnight and this morning, guys. It dropped from 0.7699, yeah, all the way down to 0.7594, okay. We see it recovering. Finally, it's recovering this afternoon, but again, it needed the U.S. markets to open for this movement to happen. So let's move on to commodities. We saw the spike a minute ago that happened on gold, guys, and silver. Look at this amazing spike. I so wish everyone would be on the right side of the trade right now when this happened. Okay, massive spike. When the U.S. markets opened a few minutes ago, gold was trading at 1,840, yeah, and now it's trading at 1,860 almost, and it's still pushing upwards. Right. Let's move on. We're looking at silver, which is movement is almost identical to gold movement. Again, after the U.S. markets opened today, massive spike for silver futures, and I'm on a 60-minute chart, guys. Imagine what happens if I decrease the time frame to a 15 minutes or a 5 minutes. Okay, huge rally for gold and silver this afternoon. Okay, now let's go to your favorite, guys. Let's go to the good almighty Bitcoin and see what is happening with Bitcoin this afternoon. Bitcoin gained a bit this afternoon as well. It's still trading low, $31,817 on markets.com. We saw the downtrend continuing for days and days, and I was wondering, where is it going to stop? This is the downtrend. Yeah, this is the trend channel I was telling you about. I don't know if you guys remember on Monday when I had Neil Wilson in the studio once again, the price was exactly here. Okay, exactly here. And I said back then, and Neil said back then as well, we might see the Bitcoin price tumbling. We might see it going down to test the resistance from this trend channel. And look what happened. We got it right. Now, unfortunately, I didn't get it right last night, but it was my fault placing a very tight stop loss. Now, Bitcoin seems to be testing the highs, okay, at this stage, or getting very close to testing the highs. Okay, so let's see what's going to happen after. Okay, if you want to trade Bitcoin as a CFD, guys, pay close attention. Yeah, first of all, draw your support resistance levels or whatever tools you're using to trade with. Then make sure you check the spread. Yeah, you check the commissions, the rollovers, everything, that you are aware of what's going on. Because once again, cryptocurrencies tend to be the most expensive asset class out there due to the lowest leverage. Yeah, only 1 to 3 or 1 to 5. Okay, so keep an eye on this turning point, guys, on a 1 hour chart. Okay, zoom out a bit, draw your trend lines, and keep an eye on the Bitcoin. If it's going to turn around, guys, you might want to have a close look at it for a potential short position, but that is your responsibility 100%. Quick look at Ethereum, guys. Let's see how Ethereum moved. All right, despite Bitcoin moving downwards, we're looking at Ethereum in an uptrend, guys. And again, if I'm marking the average lows and the average highs on the charts, okay, we're gonna see this trend channel. Okay, this is how a trend channel looks like. So this is how an uptrend channel looks like. Now, considering the uptrend seen on Ethereum, guys, we might see a push, a very good push to the upside. Yes, somewhere there in that region, somewhere around the 1,446 mark. Okay, by the looks of it, this is what technical analysis shows us. But stocks and cryptocurrencies, yeah, are rarely driven by technical analysis, guys, especially nowadays. Right. What else? Right, let's have a look at the indices, guys. Once again, let's see what is happening with the US indices. There we go, the Dow Jones, the mighty Dow Jones, which opened to the upside today. Not a lot of volume in the markets today. If you look at the bottom of the chart, guys, the volume is not there just yet. Probably we need the markets to settle for a bit, and then, but regardless, the opening was positive, guys. And if we're looking at where is it? The S&P 500, there we go. Again, positive opening for the S&P after closing the day in red yesterday. Right, guys, if you have questions, feel free to type your questions and I will do my best to reply as soon as possible. Alternatively, you can drop me an email at thechartwhisperer@gmail.com or info@instructfx.com. Okay, this is what's happening with the markets today, guys. Quick look at the US dollar index, which is on the downtrend finally. Okay. Again, a bit of a ranging market with two fake breakouts from what we see here, but overall the US dollar is trading lower. Probably traders at this stage will move their take profit levels lower towards 9020 or even lower, 9010. Okay, this is what is happening this afternoon. I see we have quite a few people this afternoon. Good afternoon, everyone. Let me know if you're struggling with anything. Let me know if you have any questions about trading or the financial markets, and that's why I'm here. I'm here to help. If you have more questions, once again, you can drop us an email, yeah, or type your questions now, and I will do my best to reply as soon as possible. Okay, let's have a quick look at, no, I don't want to look at ETFs, guys. It's a bit too complicated for beginner traders. I don't want to look at bonds either. No, okay, so we're gonna leave it here for today, guys. Once again, thank you so much for being with us today. Join me again tomorrow, same time, same place, for another great round of market talks. Until then, remember to trade responsibly and may all your trades be in the money.